All right, welcome everybody to today's Allied Quick Hit session. Happy Friday, Eric. How are you?
I'm good. How are you today, Kelly?
I'm good. I'm really good. We're in the middle of NCAA March Madness basketball, which is a great time of year. But we also see that every game can turn in an instant. So we see big leads disappear. We see underdogs pull off really shocking upsets, and fans tend to ride that roller coaster of emotions. Just like last night, the Kansas Jayhawks lost their very first game in the tournament, and now my whole bracket is ruined. So it's unpredictable, it's intense, and for many, it can be stressful. Does that sound familiar?
Does.
Yep. And that's because we're also in the midst of market madness. It's a market correction that has investors kind of questioning their game plans. So, just like in the tournament, momentum shifts, emotions run high, and discipline's tested. But seasoned investors know that long term success is not about reacting to every market swing. It's about sticking to a well thought out investment strategy. So, in today's quick hits, we're going to break down what's really happening in the markets, what this correction actually means for investors, and how you can keep your portfolio from getting knocked out early, just like the Jayhawks did last night. So, Eric, let's dive in. Let's talk about the recent correction. We entered correction territory this week. The S&P 500 has fallen a little over 10% since its high on February 19th. So, can you share with us any words of wisdom regarding market corrections that investors should be considering right now?
Sure. Truth is that corrections are a normal part of investing. Most years, the market does see a drawdown. Even in years when the market performs very well, we often see a drop at some point during the year. Like last year, 2024, we saw an 8% drop. Even though the market did very well last year, there was an inter-year drop. Other years, like 2022, when we had a bear market, we saw a 25% pullback. So on average, in any given year, the market falls about 16%. So the volatility we're seeing right now is normal, not outside the bands of what we would expect. Now, corrections like the one we're in right now, which is defined as a 10% loss or greater, happen on average every other year. We were actually probably due for a correction. We hadn't seen much market volatility in the market over the last 15 to 18 months. But the worry is that a correction turns into a bear market, which is
Right.
defined as a loss of 20% or more. But of the 38 corrections since 1950, less than 1/3 of those turned into a bear market. So the odds still favor this remaining a correction. But we do focus on risk management here at Allied, and we may talk a little bit more about this further in the podcast here, but we think our portfolios are well positioned for a correction, a bear market, or even a market recovery at this point.
Gotcha. Good. And economic uncertainty and recession fears definitely weigh on investor sentiment as we're seeing. So, what are you seeing right now, Eric, in the economy regarding indicators of a recession?
We're seeing some slowing in the economy. GDP estimates are coming down. There's been some weakness in the transportation sector, which is often a bellwether for the entire economy, but nothing, at least not yet, saying we're heading into an imminent recession. What has happened so far is that the highest valued and some of the more euphoric areas of the economy, they're taking the brunt of this downturn. The Magnificent Seven and some of the other tech stocks, the Teslas, the MicroStrategies, the NVIDIAs of the world, they've been the leaders in recent years, but they've been the ones that have pulled back the most in this correction. Well, some of the more defensive names, like a few of them that we hold, have held up a lot better so far through this downturn.
So, in a market correction like we're seeing right now, there are silver linings, right? So, can you talk about some opportunities in this current market correction?
Sure. We're continuing to focus on the more defensive areas of the market. The quality companies with low volatility, those with growing dividends and attractive valuations, as we feel this more conservative approach can help us weather any storm the market throws at us. But we're also excited about the opportunities a market correction could provide. We never want to make light of a recession. That's a serious economic concept and has big consequences for the economy. But we are always looking for those high quality companies that may get overly punished, those babies that may get thrown out with the bathwater.
I like it when you say that baby gets thrown out with the bathwater. They say, Eric, that history tends to repeat itself, right? So if we're looking at odds based on what's happened in the past when market corrections do occur, Can you give us a little insight on some investment strategies to consider with this current correction?
I think I'd say the biggest strategy for us right now is probably to stay the course. Assuming you have a long-term investment outlook and an asset allocation aligned with your risk tolerance, history is going to suggest that the best strategy is to ride it out. Over the past 75 years, there have been 38 corrections, but each of those corrections has ended and the market has went on to new all-time highs. Sometimes it happens quickly, other times it takes a little bit longer, but in each case, the market has gone on and over time, the market does trend upward. The odds favor that happening again this cycle. And instead of reacting to short-term volatility, we want to be there to help you and help our clients focus on their long-term goals and the investment plan that they put in place.
Perfect. So to kind of summarize that, you're saying as long as the long-term investment goals haven't changed, try not to have that knee-jerk reaction to the short-term market volatility we're seeing now.
Yeah, I think that's a great way to put it.
Perfect. Well, thanks, Eric. And for those of you who haven't seen Eric's current blog post, which talks about this correction, please visit our website. That's www.alliedinvest.net. And we'll also plan on posting that link in the comments section below. So, Eric, anything to add in closing?
No, if anyone has questions or wants to talk about our positioning, please feel free to give us a call. And good luck with the rest of your bracket, Kelly.
Yep. How's yours doing, by the way?
I actually I called the Jayhawks upset last night. I'm sorry about that, but that is the only one I called.
Yeah, playing the odds, right?
There you go.
Well, that's it, everyone. Thank you for tuning in and happy March Madness weekend.
Thank you.